Oops, sorry, I was muted. Good morning, everyone, and welcome to our first ever stock market live stream. This is something that has been asked for so many times, so I'm doing it as a trial. Think of it like a pilot. Make sure you go ahead and like the video. That will help push this video out to others. We're going to see how well this series does. And if it does, I'll keep doing this every Friday right before I start work. It's a significant time investment. So I want to make sure that if I'm putting in the time to sort of give you guys the info, have this discussion, talk about the stocks that you guys are investing in, not just the ones that we've talked about on the channel, but anything that you want to kind of go over, we can do that live. Now, before we get into anything here, let's take a look at how the stock market is doing today. So, we're about to open in about an hour and a half, and you can see the futures aren't doing too well. If we go to the NASDAQ, and by the way, just so you guys know, this is TradingView. This is probably my opinion for the best service that you can get to monitor sort of all of your equities. So we're going to open it up, and we're actually seeing here that there's been a sort of wild swing at the close of day, right? So near the end of the day, we started to see the Nasdaq sell off. And what we can do here is let's kind of zoom out by a year, and let's just go like that. And I'm going to remove this to help. Ignore the lines because they sort of help me. What I do with these support and resistance lines, as well as the Fibonacci retracement, is it helps me like map out sort of market pivots. You can see here that like in October we sort of came down to 10,427, and we've sort of retested in a very similar zone, in November and in December, and ever since December the market has been just rallying straight up, right? This is just volume, so ignore that. But by coming out here, you can sort of see that the market has just gone on an absolute tear, going up about 2,000 points on the NASDAQ. And now it's starting to come down, right? Like it sort of hit this line of resistance, and the market sort of bring it down right now. One of the things I will say, and this is something that is super important, is you can't just look at the green candles when you're thinking if you want to buy or sell. I I was not mainly in the market anymore as of last Friday. I started selling on Friday. I got rid of a lot of my equity. I sold a bunch of my shares. The shares I believe in the most, for example, Tesla, I was still I was still selling a bit, and the reason for that is we want to make sure that we de-risk our portfolio, and nothing that's been going on right now really makes that much sense, right? Like if you look at the market and the macro environment conditions, this is not indicative of a market that's healthy, right? Let's just, before I show you SPY, let's just sort of zoom out and take a look at where we came from. So let's go back to pandemic March 2020 and see how that went. So you can see right here, if I zoom in, we sort of hit a local high of 9,756. Then this thing called COVID started being talked about. The world started shutting down. I remember because February 14th, two Valentine's days, actually 3 Valentine's days ago, I was in Vienna, Austria for a conference for work. And the week after, COVID became very, very a real thing, and sort of the market reacted to everything closing down, and you just saw a drop of about 30 something percent, right? Like the market sort of came all the way down to like 6K, 6.6. But then over the next year, we saw this absurd rally where like the market just basically doubled and more. It went all the way up to 16,000. And December 2021, when everyone was talking about the Christmas rally, I don't know if you guys remember this, but the market actually started to sell off. And the market started to sell off in a severe fashion. And this was sort of the start of this bear market. We've been in the bear market for about a little over a year right now for stocks. About a year for crypto. Crypto was lagging slightly behind, and we'll talk about that. But basically, you can see here that the market went from highs, all-time highs of 16,700 to 11 to like 12,900 to 15,000 to 11,000 to 13,000 to 10,000. And what should be indicative here is the market is not just looking to sort of go straight down. Things don't just go straight up and they don't go straight down. What happens is most of these moves are institutions. So you'll have big selling pressure, then you'll have a mini rally. And the reason you have these rallies is, don't be fooled. These are not retail rallies because retail cannot make up this sort of volume. What happens is you get institutional buyers come in to sort of prop the market up slightly along with retail, and then they dump. So the idea here is there's a lot of liquidity that's stuck up here in these zones. What they'll do is they'll try to like hit the buy order. So like let's say they're down to like 13,000. Well, people will start getting bullish about 14,000, above like 14 and a half. So they prop the market up slightly, and sometimes, and actually most of the time, they use news to sort of get there. And then what happens is the market will come up. A lot of retail buyers will go, oh my God, here comes the recovery because of what they saw before. And then the market will dump. And we see this consistently. That's why you see a sort of zigzag pattern. But like the way you should be looking at this is, what is the overall trend? Well, the overall trend is down, right? So where is it? If I go like this, if I go arrow, right? The arrow is like this, right? Just gotta, yeah. So basically, what happens is you just take a look at this, and it goes down, slightly up, down, slightly up. In this case, it broke the previous pivot. So it sort of signaled potential change in trend. But like I said, we know that the macro environment is horrible, like with inflation needing to be controlled. Then we saw a massive dump. I think this was pretty bad in the summer, a recovery all the way to August, right? So you had like 5-6 weeks of green again. And guess what? The market came down, and it came down even further than where it was in June. And what we're seeing here was a local bottom. Does that mean that this is the sort of final bottom? Definitely not, because the stock market came up, came back down, went to 12.8. And remember, look at these highs. Like before it was 16,000, 16.7 thousand, 15,000, 13,000, 13.7 thousand, sorry. 12.8 thousand, we're likely to see it come down around here. Now, I'm not saying this is definitive, not things can change, but you have to sort of be prepared, right? There's nothing good comes from you preparing for the best case scenario. And people, especially like naive and new investors, they think things will just go up in the short term. Right now, I would not be buying call options. And I also wouldn't be buying puts. The reason for puts is until we see a clear trend. So like a clear trend would be sort of breaking this line over here, 12.1K. Then, we can see a move down to at least 11.5. That can be sustained all the way down here, right? So sort of what I'm expecting to see is a move down on the NASDAQ to around 9,500. Like I said, not financial advice. You know what? Maybe I'll put that in here for those of you who have the audio off, just in case anyone wants to sort of say anything. Everything I say here is not financial advice. It's for entertainment purposes only, and it's sort of like the way I'm thinking about it. If you decide to sort of go bullish, I hope it works out for you. If you go bearish, I hope it works out for you. I'm only here to talk about like my opinion, right? So this is sort of like where I see the market going. I see the market coming down around here, potentially having some rally and then coming back down. And I don't expect a full scale recovery until the macro environment gets better. Why would anything change? In fact, right now, we've had about, 6 weeks again of just straight up. And if you look at the trend, right, nothing goes straight up, nothing goes straight down. So that is sort of my expectation. We'll sort of see how that plays out. And if we look at SPY, which is tech heavy, and so I'm just gonna open this up, SPY says a very similar story. So SPY, if we go back to March 2020, let's take a look. 3.3K all the way down to 2.1, so like a little more than 30%. Then all the way up from 2000 to 4800, right? All-time highs. And then if we sort of zoom out here, let's take a look over here. We go from 4800 to 4000 to 4600 to 3800 to 4200 to 36, 43, 34, 41, 37, 42. So SPY is a little healthier. And honestly, it's for this reason that it doesn't mean that the general stock, like it doesn't mean that all stocks will go down in this time period, because the SPY and the NASDAQ are sort of a basket of their industries. This is sort of where you want to be investing in singular companies. This is sort of why I invest in Tesla, and Tesla is probably the company right now that I believe in the most. That doesn't mean it will give me the highest ROI in this time, but I believe that Tesla is profitable. They have a lot of cash on hand. They got a high margin business. A lot of the companies that are borrowing tons of capital, they're the ones who are getting destroyed by this. There's no more free money that's going around. And because, these indices are weights of the sort of, sorry, these indices are sort of weights of or averaged of their industry, you will typically trend downwards over time. So I'm expecting SPY to come back down, probably break this 3,491, maybe come down to 3,200. But like I said, we'll see. Let's take a look. Hey, Angie, how's it going, buddy? I think Andy's been one of my OGs since I started this channel, when it was only focused on stocks. And I've got the comment right now that I focus a lot on crypto and DeFi kingdoms. So this is sort of why we're doing this this video, right? Some sort of my knowledge or my beliefs so far, and what's going on. You know what? But President Biden said things were getting better. Yeah, where is this?
Hold up. Wait a minute. Something ain't right.
Yeah, that's sort of, hopefully you guys are thinking about that, right? Like the US is working super hard to pretend there's no recession, and a lot of that is politically driven, because you don't want to be the one to put the country into recession. And let me tell you, once they finally admit that we're in a full-scale recession, I'm sure they're going to find a way to blame it on previous presidents, let's just say that. And I think that no one like to point the finger, right? Our goal here is we want to play the trend, right? Even if you don't want to short the market, there are ways to sort of be profitable, right? When SPY is overextended, I don't add to my tech positions. Where I add to my tech positions is sort of, below 3,600, below maybe even below 3,800, start buying the dip and sort of, doing it that way. Obviously, like if you believe in a company long term, it doesn't matter when you buy it, because you'll sort of get that coverage. But for me, I'm looking to maximize the capital I have. So I stopped buying, and I've been selling recently. So that's sort of like a sort of overview of the market. OG for life. Are you at work? Are you at work? Are you listening right now at work? Or I know that it's Friday. Like, what is it, like 1 p.m. where you are? But yeah, thanks for coming. Let's look at cryptocurrency. I got to refresh this. Now, cryptocurrency didn't used to be tied to the health of the stock market, and to some extent, slightly, because what happened is a lot of companies, especially those in tech, they started buying crypto. So like you had Tesla buying a bunch of Bitcoin, you have MicroStrategies, you have some really high market cap companies that have put a bunch of their assets in crypto. So like they're somewhat intertwined now. At the same time, if money is scarce, right? Like the whole premise of this, what's going on with the stock market is money is scarce. Well, if money is scarce, why would you want to invest in something highly speculative? And that is still what crypto is, right? Like something that can swing 10, 20, 30% on the daily, that is speculation. There's a lot of variance in it. And you have to have a, iron stomach to sort of be able to deal with that kind of variance. Now, Bitcoin is sitting at 23, 24,000 almost. It went up to 25,000 US about a day ago. And I'm going to sort of talk about what you need to look at over here. Number one, you want to look at the total market cap of all of crypto as a sort of health indicator. It's currently 1.15 trillion. At the high point, it was around 3 trillion. So we've shaved off 60% of our value. That's the first thing. Number two, the health of the entire ecosystem depends on Bitcoin. There is no world, at least right now, where Bitcoin does horrible and every other coin does well. Bitcoin, when it goes up, all of the altcoins tend to trend up. When Bitcoin does bad, all of the altcoins tend to trend down. Ooh, lunch break. Jealous. You know, it's funny. I'm back on my diet, so I'm trying to get back to like, what is it, like 13 or 14% body fat, and that means cutting out some extra meals and doing a lot more cardio at night. And I wake up hungry every single day. So I'm super jealous of you right now.
Emotional damage.
Man, I don't know why my sound clips like cut off like a second earlier. I need to look into this. So let's look at Bitcoin. Let's go to the chart here. And when we go to the chart for Bitcoin, I think it's super important to come back out about. Actually, I'll go back like this. So let's look at this sort of zone. So this is sort of our last bull market for Bitcoin. It was sitting somewhat flat around 10,000 US dollars. At the end of December, it just started to take off, right? So it went all the way to like 60,000 US in the summer. I was sort of foolish and I didn't take profits really there. I sold only a tiny bit. And I remember like mapping that out and telling myself the next time it comes there, I'm gonna do this. I'm gonna sell. I'm also gonna sit there and buy the dip. So that summer, I used to do. So here's something I do that I don't know if it's the right thing to do, but while all these assets are sort of low in value, I make sure to take as much money as I can and I put them and park them in these assets. So I look at all my bills for the month and sort of take all the extra cash that I won't need, put in my stock brokerage, put it in my crypto brokerage accounts by buying like either stable coins or buying certain assets. And what I do by doing that is just like I don't have the money in my bank account to spend to go out and buy like nice Louis Vuitton hats or like, go out to like so many fancy parties and going out drinking and stuff like that. It actually has helped control my spending because my bank account is literally sitting there on bare bones. And I make sure I use credit card for so much more everything else so I can make sure that I have some, flexibility so I'm not just stuck here like with the least for that month. But well, especially in the summer, every time I got a paycheck, I would just dump the whole thing into crypto. So I was buying Cardano. I can't remember what it was. I think it was like less than $1 at this point in the summer. I was buying Bitcoin around like between 35 and 40K. And then I was buying a bunch of other coins. Once we came here, and like for those of you who have me on Instagram, I think it was like early October, I posted an image and I showed the chart and I said, I basically like implied how I got screwed last time. And I said, this time I'm taking profits, and I sold 80 to 85% of my crypto in like early to mid October. And you know what? Once I think Bitcoin was like 61,000 US, it went to like almost 70,000 US. And I'm sitting here like, but I sort of held my conviction and said, hey, you know what? it's super overextended. I'm gonna wait for a pullback, and a month or so later, it started to decline. I bought some back in this zone. It recovered, and then it sort of dumped again. So I started buying them in this zone, and I've been adding to Bitcoin ever since. Now, Bitcoin on the whole has not really recovered. Bitcoin is sort of like trending within the zone of 18 to 23 to 24,000. I don't think there's a rush. So if you're sitting here going, oh my God, Bitcoin's cheap, should I buy it right now? I don't think there's a rush. Until we've seen the macro environment change, nothing nothing spectacular is going to happen where you're going to miss out. It's not like last like when the pandemic happened, where the stocks just like tripled or doubled um, after the crash within like a few weeks. That won't happen. We won't have a V-shaped recovery. We're gonna have this sort of flatline recovery going like zigzagging a bunch, and that gives you a ton of time. Yeah, I'm just kidding with you. I'm just hungry. I'm hangry. I've got shoot. Peace out. All right. Thanks for coming, Angie. Hopefully you can come by later and watch the full video. As I was saying, sort of in the intro of this video, this is something I'm trying out. I'm not a morning person, so like typically, like I'd have loved to sort of sleep in, stay in bed, and get an extra hour of sleep. I woke up an hour sort of early to sort of prepare for this, but like I said, I will do this as long as there's a demand for it. If people don't show up, if people don't want to do it, I'm going to monitor views, then I won't do it, right? Like I started doing live streams for DeFi Kingdoms, and my first live stream got like 10, 15 views, but now I get like 40 to 50, and the videos get like 1,000 or so views after the fact. And I hear from a lot of people that it helps them. Sort of the reason to do this is like I want to have a regular video series where you can ask me questions about any stocks that you're looking into, and I can sort of look at like some of the stocks I talk about, like Nano Dimensions, Zomedica, and stuff like that, as well as like a general broad market update to sort of tell you where I think we're at, right? And like I said, I'm always open to feedback. So if you'd like to hear something else, or if there's another way I can add value to you guys through this, let me know, because I've sort of dedicated the hour every Friday morning. And I wish I could do it other mornings. The challenge is I work for a company where I have to do a bunch of sometimes 7 or 8 a.m. Eastern meetings with another region. And because of that, I wouldn't have consistency on the stream. And I want to sort of build something out that I can give you this hour dedicated. And obviously, like, we do have other ways of supporting, right? So one thing I will say is if you don't want to wait long and you sort of want to just chat and hear about what's going on in the stock market, crypto, DeFi Kingdoms, whatever else about your equity. Maybe you're thinking of buying a house. Join our free public Discord, because there's a lot of people in there, about 500 or so. And, we're all open to chat, and you can always reach out to me as well. Because like I said, this is supposed to be a community. I don't want this to just be a sort of like community for DeFi Kingdoms. It's sort of a community for everybody, because I believe in transparency, and that's sort of the reason why I started on YouTube, right? Okay. Hey, Coin Wizard. Good morning. How are you doing? So that's sort of Bitcoin. And like I said, when we saw Bitcoin start to do very well in the last like few days, like so Bitcoin jumped from 21 to like 25,000 pretty much. We saw all of the other cryptos, right, start to skyrocket. These two, Bitcoin and Ethereum, are probably the two biggest like indicators of how well the crypto market is doing. Bitcoin as a whole, Ethereum controls all the prices of altcoins, and everything else like in the top 20 is sort of like somewhat stable, and outside that depends, it's hit or miss, right? Like I've got a bunch of Avalanche, I've got a bunch of Solana, I've got a bunch of Polygon, Cardano, XRP, and where's Atom? I think Atom has dropped a bunch, but I have that too. Oh my God, where'd it go? Did I miss it? Oh my God. Oh, here it is. I don't know how I missed it. This is another one. I believe this is like a very strong crypto. Talking DeFi, a Gen Zero sold for 3,800 crystal. No way. What? Really? Well, I'm gonna check that out. So give me 1 second, guys. Wow, a pirate warrior, Brave Cohen. Oh, you know what? So Brave Cohen's a bot. So obviously, like that's not a that sucks. I mean, I wish, and this is sort of my controversial opinion. I wish that you couldn't create a bot to sort of snipe sales, because if a mistake is made, either somebody else can buy it or the user can sell it. The problem right now is if you list it inaccurately, you can't even cancel it by the time the bot's already bought it. And I think that's not fair at all. Yeah. 7:57 a.m. Man, 3,800 crystal. That's crazy. Like, we need to create a system where it's not predatory. And like, ironically, the username was Wagme Bro, which is we all gonna make it. And I don't think that guy's gonna make it after selling their Gen Zero for that cheap. You know, I feel bad, but I'm actually interested to see how they listed it. There should be a flag. So for those of you who aren't familiar with this ecosystem, um, if you try to sell an item for way below floor price, there should be a flag that pops up. From what I've heard, people are using bots, and their bots are selling the Gen Zero by accident, right? There's a error in some of the coding, like not for DFK helper. I can't remember which one it is. And what happens is it ignores and declines the flag and lists their Gen Zero. And I'm certain that is likely what it is, because if you try to list it a Gen Zero for like 10% of its value, red flag will show up. Unless you're sitting there going, "Oh, I don't care," which I doubt. But I'll have to look into this because that's not good. And I'm probably going to post it on Twitter. Actually, you know what? I'm going to post it on Twitter. Give me a second. Let's let's screenshot that. And for those of you who don't have me on Twitter, make sure. Actually, I don't know where you can do the button, but if you go to my Twitter, make sure you follow it. I do a lot of talk about the stock market, about crypto, about the channel, and it is. If you want to be in touch with me and sort of see what's going on, definitely a great spot to do that. I'm trying to think of something to say. Yeah. So we'll just put this there. Hopefully, like whoever ended up losing this hero is able to sort of make a deal to get it back. I've seen a couple people who've sold their assets by accident. That you know they've worked with the people. They paid like maybe 5x, but that's still better than that's still way better than the opposite. Not too bad. You know what though? I think there's probably going to be a way where I may just want to create a bot then, right? Like, well, where's the value in why don't I just create a bot, put a bunch of liquidity in it, and have it start to snipe sales and sell the Gen Zero back at like 2x the price? Because you want to sort of like prevent people like this from getting a stranglehold or kind of ruining it, right? And you want to make it worth your while, because creating a bot is going to take forever, unless like the community builds it and then we all have it there to sort of like be there to prevent this from happening. And if even like it stops half of these, it'd be perfect. Okay, so going back to the stock market, let's just kind of go back here. One of the things I would talk about is CPI. So the way that you need to look at the market, right? The market right now is controlled by fears around inflation, and inflation is leading to interest rate hikes, right? As the Fed raises their interest rate, the value of our assets comes down, because or the value of our assets that we're buying in the stock market is coming down. People aren't buying houses as much anymore because the prime rate keeps going up, right? And the best measure for us on if the Fed's going to stop increasing interest rates is if inflation gets under control. So what we do is every single month we look at what's called the CPI report, right? The Consumer Price Index. It's a sort of measure of it's a sort of measure of a broad basket of common goods and services. And unfortunately, it rose 0.5% in January, which is translated to an annual gain of 6.4%. So the challenge here is we want to see it come down. Inflation keeps going up, and because of that, it's going to very likely keep the Fed increasing interest rates, right? Like what the stock market does is it tries to price in sort of all the things that are happening, and a lot of people assume that the worst was over, not many more rate hikes coming, and when you get a CPI print like this, it's bad. And I expect, like we talked about expectation for CPI on my other live stream for DeFi Kingdoms, and that was sort of the reason why I sold two of my Gen Zeros. I wanted to sort of get ready and take my liquidity out of the game, transfer it into like stable coins like USDC, and then look for opportunities. And the reason for that is if we knew inflation was going to go up, and even if like you hit expectations, that's bad. Now, what didn't happen was the market didn't just jump on that day. And we've seen that three times before in 2022. What happens is it goes back to what I said, right? Like if you look at the stock market already has these sort of moves ready to go. The challenge here is the institutional investors want to make sure they get all the liquidity, which is why they sort of do these mini rallies and force the market down and selling them and dumping them. They need the narrative on the media to sort of support that. So when the CPI came out and the market didn't dump, people got emboldened and said, "Oh my God, this time is different. Guess what? I guess inflation doesn't matter anymore." And they started buying en masse. We saw a big rally, and then at the end of the day yesterday, the market started to dump. Now, part of that does have to do with the PPI, but we'll talk about that in a second. Hey, Mookie, how's it going? Good morning. Thanks for joining. Uh, am I invested in any AI crypto projects? No, not really. I've there hasn't been anything to the sort that I've found interesting. I've tried to invest in sort of the coins that have survived one bear market at least. So XRP, Cardano, small components of it, Ethereum, Bitcoin, Atom, um, Polygon, Dot, AVAX. Those are my biggest bags. And then of course, like smaller tokens like Jewel. Jewel is likely my biggest bet, the DeFi Kingdoms ecosystem in crypto outside of Bitcoin and Ethereum and Atom. So hopefully it does very, very well. But like I said, this space you don't know, but you can make a ton of money when you're right. And the DeFi Kingdoms team is definitely doing something right. They're doing a ton of things to build in the bear market, and we just need to see the sort of proof of concept come to fruition. And everything they're doing right now is small little baby steps to sort of get us there. So what happened was the PPI report came out. What was it? Was it yesterday? Yeah, it came out yesterday, and it also rose 0.7%, which is 0.4%, which is higher than the 0.4% estimate, right? And what this index does is it measures what raw goods fetch on the open market, and it was the biggest increase since June. So once again, horrible news. These are the sort of things that when they happen, it should be a red flag to you. It's like if you go on a date and this girl's telling you, "Yeah, I still hang out with my ex, he still comes over, why is that a problem?" Like those are the kind of girls you never see again. You know what I mean? And the same thing here. Get the damn red flag. When you see these things, you should be like, "Hey, even though what's happening in the stock market, what I'm seeing in the prices of my cryptos and my stocks are not reflective of this, I know something's wrong." And if you ignore it, you're going to be humbled. And I think a lot of people got humbled yesterday let's just take a quick look overall in the stock market. You can see over here, these are some of like the things I like to hold. Tesla was down 6% near the end of day. Let's go to like end of day. Like you see, it went from here and it just started dumping. And the same thing happened for Apple, which is another one of my favorite stocks. It went to 156, and by close it was like 152, low 152s, right? These are sort of like the things that you need to be aware of, because the stock market can't be sort of out of sync with reality, at least not for too long. What happens is the institutions go, okay, well, we let people have fun for long enough. Now it's time to sort of dump and sell and take our money, right? And unfortunately, what that means is retail holders are left holding the bag. So if I was to go through sort of the stocks that I care about, and you know what, maybe we'll do that in 1 second. I'll do one last thing here, which is talk about Chat GPT. So Chat GPT is sort of all the rage, right? Like everyone is talking about, oh, Chat GPT, tell me a good pickup line, or Chat GPT, predict X, Y, and Z for me. And for the most part, it's like a sort of social experiment. And it's really cool, right, to see sort of what these bots can do. One thing you should remember is Chat GPT, sort of it's most up to date as of like mid 2021, and everything else is sort of supplementary information. But they made a rogue version of ChatGPT, and basically it's saying that the stock market is going to crash next month. Now, Market Insider is saying that the AI chatbot is wrong, which for me, that tells me it's more likely to be right than wrong. And here's why I'm going to say that. The media never has your best interest in heart. And I hope all of you recognize this. The media is getting paid by institutions. When AMC, for example, was like $10, before it ran to 72, they were saying, oh my God, this is going to go to zero, whatever. And then when AMC was like at 100, or sorry, not 100, like 72, oh my God, AMC, now's the time to buy AMC. They kept telling people to do the opposite of what had to happen. Just like when Tesla was down to 110 a few weeks ago, oh my God, Tesla going to zero. Now that Tesla's 200 something, oh my God, Tesla 500. You can't trust what you see there. They are not on your side. For me, I actually do the opposite of what these articles say. Like this is sort of what Jim Cramer. I don't know if you guys have heard of Jim Cramer and his reverse index. Jim Cramer will tell you that the stock is going to the moon. The next day, the stock's going to lose like 30%. You know what I mean? Jim Cramer, when he's bearish on a stock, I'm like, oh my God, I need to go all in here. But one of the things here is like, just keep in mind when you look at media, if media tells you that something's going to happen, don't just listen to it. Use your own gut instinct and think about like the broader sort of schematic, like I went through earlier today around the macro environment. Now, a couple things. So Tesla is one of the stocks that I am severely bullish on, like hyper bullish on. I believe that, I want to die with Tesla as making up a huge portion of my portfolio. Now, Tesla is a stock that didn't do too well near the end of the year, and I'm going to talk about that in a second. But let's bring up the chart. So go here and look. Tesla sort of hit all-time highs at 414 back in November of 21. Now, one thing I will say is Tesla, you may have been like, oh my God, I thought Tesla was 1,000. Well, they did a 3-to-1 stock split sometime in the summer/fall of 22. But Tesla hit 414, which was around 1,200 at the time, sort of wiggled around here, around sort of, one of the early depths of the bear market. It was sitting at 233. Then in the summer, it was sitting around 200. But then it recovered to 313. I remember being like in the fall, sort of trading a bunch of shorts on Tesla and opening some in the 300 range and selling them around 200. But what happened was once we saw Tesla come back to this range, something else took a massive jump on Tesla. And that was Elon Musk having to sell a significant portion of his shares. Now, Elon Musk, as you know, bought Twitter. I don't know if he meant for it to sort of go out there as a troll bid, but he ended up being forced to buy it. And he had to sell a ton of his Tesla shares to do so. I think he sold something like 45 billion. I can't remember, $45 billion worth of his shares. And this took the stock from about 200 bucks. I didn't even realize it went all the way to 101.81. I stopped buying at 120, 110, but like 101.81 came all the way down here. And then the problem is that's a lot of downward pressure, right? And it was sort of the easiest short you can make because you knew Elon was selling. So for those of us who had shorts in Tesla, that was amazing. I'll be honest with you, I sold my short way too early. By the time Tesla hit 170, I was out. I didn't realize it would go this far. I wish now looking back, I sort of wish I kept some of it and sort of let the rest ride. I wish I took profits on most of it, but let a few ride. But that was in January, the low point. And since then, it's doubled in value over the last month. And that has to do a lot with market sentiment, people realizing, hey, nothing fundamentally wrong with Tesla. Tesla is the sort of business you want to invest in this recession. And honestly, it's like a great company with high margins, profitable, tons of cash, tons of investment, tons of growth that are on the horizon. So Tesla's doing well. It's coming back. That's sort of a V-shaped recovery that we're seeing. And like I said, if you look at the prices of Tesla and the media that's related to it, at 200, media's like buy Tesla. At 100, they said sell Tesla. At 200 again, they're saying buy Tesla. So like it's exactly sort of the opposite. And Tesla did have some news yesterday, which is they are voluntarily recalling 363,000 vehicles because there may be some challenges with the full self-driving beta. Now, that doesn't mean that it's going to actually be tons of issues, but they're super on the ball. Tesla is innovation. Tesla is really driving the standard for electric vehicles. And what's amazing about this company is they are not just going to be a pioneer in the EV space. They are working on other projects like robotics. I'm sure, that stuff actually gets me worried because like we see like, I think it's Terminator or all those other movies. What they've taught us is AI and robots, like iRobot. Do we really want to meddle and sort of toy with fate by creating those? I know that the robots that they're creating for Tesla are going to be like slower and everything else, but who cares if they're slower than a human? They have a metal body. Like you can't damage them, and like they'll like destroy you if they get sentient life, right? So that's one thing. But they're also working on like insurance underwriting, ride hailing, autonomous driving to sell. Like right now, we're investing in one component of Tesla's business. They have tons coming, and that's sort of why I'm looking at Tesla as like the Apple of the EV industry. Just like that, Apple is probably the stock I'm second most bullish on, and I use all of their products, even to the point where I get made fun of this. I have like an Apple Pencil. I have like an iPad. I have an iPhone. I got tons of their devices, right? The keyboard, the mouse pad. I'm on an iMac right now as I'm streaming. Super bullish on Apple. I love their products. I love the ecosystem. And this is another company where it is considered to be the super safe tech stock, and it had highs of 183 bucks last year, right? I think it was 183 highs. Yeah, 183. And we've sort of come back close, right? We hit 179 in March of last year, 176 in August. And since then, we haven't really come close. We've 157. I think it's going all the way down to 124. Now that we're sitting at 155, I expect it to at least come to 140. So I have sold a bunch of Apple around here. 140 is sort of where I'm targeting a buy. And I expect it to sort of either come down a little bit more or it goes up. But you know what? Honestly, when it comes down here to this line, I'm okay either way because I would love to keep adding to my Apple shares over time. I think it's a fantastic company. Let's talk about Zomedica. Zomedica is a company that I've covered a bunch of times on this channel. It is a pet healthcare company, and if we zoom out, we'll look at how well it was doing. Prior to the bear market, not here, but like right here. If we look at this, it was around 6 cents. It had a threat of being delisted. They announced the launch of True Forma that was coming, and it skyrocketed all the way to $3. And ever since, it's been like a ski slope. It's just been coming down, coming down, coming down, coming down. And sort of, where we've gone with this company is they raised a ton of equity. So when the price was here, there wasn't as many shares that were out in the market, and they raised a ton of shares, diluted their shareholders, built a lot of capital, filled their coffers. And while I wasn't too happy about it at the time, they have used that capital very well to acquire many companies like PulseVet and I forget the other one. I think one starts with an A, but there's a couple companies that have come into the fold, and they have actually started to generate significant revenue for the company. In fact, it started to right the ship. So while the stock hasn't really improved, most of the reason for this is it's not a profitable company. While they do have cash, there's a ton of cash burn still going on, and I think that um, you know while it is selling off, you have opportunity to sort of buy and sell. So in the videos that I make, I talk about, you know, buying Zomedica at like 20 something cents, selling it every time it pumps around 30 cents, and rinse and repeat. We are so far outside of the original like buy and sell zones that I'm holding 10,000 shares to get to at least 65 cents. And I have 2,000 shares that I sort of keep like selling every so often. So that's sort of Zomedica. There isn't that much that I want to talk about here because sort of the last update I covered in my previous video, which talked about their preliminary results for the quarter 4. If you got a chance, I hope you listened to their investor conference. It was okay, but there wasn't anything earth shattering coming out of that. And sort of the last stock I want to cover today is Nanodimensions. Nanodimensions is a 3D printer company, and it was another company that I'm super bullish on, like bullish in the terms of speculative stocks. They have a market cap that is way lower than the cash on hand and the equity in the company. It's also a company that like sort of has been bouncing between $2 to $3 over the last year or so. Once again, it comes back down to the market, the state of the market, and like this is not a time for speculative assets, right? Tesla, Apple, Disney, Microsoft, stocks like that are stocks that I truly think that we can get lifetime opportunities to buy right now. And that is sort of why I think a lot of people are buying those, because usually what happens is when we get to like a decent market, those companies are priced like very accurately. You're no longer getting deals. And when that happens, you have to like, if you want a good opportunity to buy, sell, or flip, you have to look in sort of the speculative penny stocks. Nanodimensions is one of the better penny stocks in my opinion, and it has sort of been trading range bound for a little while. That being said, like once again, we look at the rally, right? So we're seeing from where is it? January went from $2.06 all the way up to like $3, right? So 50% gain. Nothing to scoff at. But once again, is it sustainable? And is this sort of the time for stocks like this? I think you can't go wrong sort of buying it around these prices. I'd probably wait for it to go back to $2 if I'm going to buy more of it. I have like 1,500 shares right now, spread across 2 accounts. But it's not where my money is going. My money is going into companies that are right now I can sort of buy and get those flips. And the last company I'm going to show you today is a company like that. Every so often we get this opportunity, and the stock is called Mara. Mara is a Bitcoin mining stock that went up all the way to like 80 or $90. And you can see here in the summer of 22, it went to 520, jumped to $18. I remember I was on an airplane. Where was I going? Oh, I was going to Madrid, Spain for work. And I remember I was actually telling Andy, who was in our live chat earlier, hey, I'm going to buy about 300 shares at like 530 or something like that. And a few weeks later, I sent him a sell message when I think Mara was like $17, where I sold all 300 shares. And the thing is, you can see here, Mara has sort of respected all the lines, and it has come down to 311, rebounded 957, come down, rebounded. This is a stock that like I truly think long term is a great way to get exposure to Bitcoin, and it's sort of like very high variance, right? So like right now Mara is 721. I sold a bunch of Mara yesterday around 8:30. I think it was 8:30. And I expect Mara to come down to like a little around $4 to $5. I would buy a bag here, and I'm gonna buy a bag if it comes back down here. This is one of those stocks that I'm literally setting and forgetting, and then every so often I just like get to do it all over again. And right now I'm playing with house money because I've made a ton of money on Mara. Like I made, what was it? It was $1,500 basically to buy here, and what was it, like 17, 4, 51. Yeah, I made $3,600 on that Mara trade last time, right? I made like a little, I would say 300%, like 280 to 70%. Still significant. And now I'm just house money. You know what I mean? This is a great stock in my opinion. They hold Bitcoin on their balance sheet, and they have a great mining operation that keeps expanding. But what can go wrong? This is a stock, in my opinion, that I have put as a higher priority than Zomedica and Nano Dimensions in the short term, because I see the swings and I want to capitalize on that. I don't like money staying stagnant. I have money in the big boys like Disney, Apple, Amazon, Tesla, and in this case, this is the money that I keep watching, right? I'm like, okay, buy it when it's low, sell when it's high. So like right now, it's at $7.21. It dropped $1 at the end of the day. I hope it keeps coming down so I can buy more of it. I want to have a huge bag of it again for it to sort of pump, right? This, in my opinion, I like Marathon Digital Holdings or Mara a lot, MARA. Cobra, thoughts on Vanguard buying millions of shares on penny stocks, Zom and Mall? Yeah, so like it's good. What I would say here is don't worry about missing the boat on these stocks. We're not going to wake up one morning and Zomedica is going to be $5. I'll be honest with you. Zomedica is going to slowly like trickle, and so will Mall. So looking at Mall, right? Mall is a stock that it's an EV company, and it's sort of like just been like withering away, right? Like its market cap is like $500 million. Companies like BlackRock and, like as you said, Vanguard is buying millions of shares. What I would sort of be focused on here is long term. What's your long term plan? And if you're okay with buying some shares here and leaving it, forgetting about it, go for it. If not, the way I would play this is look for what's the best deal on the market. A lot of us are so used to buying penny stocks because they've always been the better ROI. But when you get Tesla at $100, that's a steal. Like buying Tesla at 300 is not a steal. Great, it's a great investment, but it's not a steal. Tesla at $100 is a steal. Apple at 120 is a steal. Mara is a steal. These speculative stocks, while they may seem like a steal, they will always be the last stock to sort of skyrocket or moon, because and when I say that, I mean in the absence of any absurd news. So if you know of any catalysts specifically about the company where you say, okay, well, maybe they're potentially going to get acquired by another company to take their tech, that could be a reason to buy, right? But in terms of buying and holding, even with Vanguard buying millions of shares, BlackRock buying millions of shares, it doesn't really change much, because you have to also view it from the perspective of the majority of people who have money in that company. So let's look at Mullen. There are tons of people who bought Mullen all the way down from $3 and even before that, right? Like Mullen has a ton of bag holders. This share is down significantly. So maybe they bought it at $1.05, 64 cents, 40 cents. It's sitting at 31 cents, right? Well, when Mullen starts going up, what do you think people are going to do? Do you think people are going to hold it and wait for $10? Or do you think people are going to start selling off significant portions? And this is sort of why when you get a massive sell-off in a company, it takes so much more for the stock to rise, than for a company that just IPO'd and goes up, because you have so much negative selling pressure. You have a ton of bag holders who are just sitting there waiting to dump. And this is the same for Zomedica. This is why every single time Zomedica goes up, it goes up shortly for a tiny bit, and then it has a massive dump. And yeah, like part of it is market driven, but it's also there's significant selling pressure that's applied at every single one of these candles. And eventually you you sort of turn the corner, and that sort of selling demand has taken over to the point where, you know, it just comes all the way back down. So this is sort of why when you're buying these things, just remember, people are looking to take profit on you as soon as possible. So while I'm not saying not to buy these shares, because Cobra, like you're right, definitely 200 institutions holding, that's fantastic, right? Make sure that like when you look at your portfolio and you're deciding if you want to buy or sell or whatever, if it's a speculative company, just make sure that you're not emotionally attached to the money you put into it. Because I remember, I think I sold Mullen at like $1.50. I made a tiny bit of money. I was in Vegas. I made like maybe like 10% on the company. But if I held all this time, I would be down like, what is it, 30 cents right now? I would have lost 4/5 of my investment. And like I said, maybe now's the time to buy because maybe it goes to $1. But just remember, there are a ton of people who are sitting there at 40 cents, at 50 cents, at 60 cents, waiting to sell on you. So you need a big enough catalyst for it to go up, or if you're okay waiting for the long term. At a $500 million market cap, it's not really like a big stock right now. So like yeah, you could definitely park like a couple $100 there if you want to, consider it like a lotto. But institutions holding should not be the only reason that you buy, because institutions are holding on to a lot of garbage because they sort of spread like they sort of spread their like value, like their risk. And I'm telling you, for all the shares that like Vanguard or BlackRock has in these companies, you should look at the component, how much that makes up of their portfolio versus how much companies like Tesla make up their portfolio. And like while we're hoping for like a 5x with Mullen or like a 10x with Zom, with Tesla we want a 2x. And that 2x is, I don't want to say guaranteed, but it's way more guaranteed than pretty much like any of these others are, especially if you get Tesla at 100. And that's sort of why I'm always looking at the deals right now for the blue chip stocks, because while we're in a recession and things are undervalued, I would focus so much on buying those stocks that you won't be able to buy in 5 years, right? Buy those stocks that would make the fundamental crux of your portfolio now while they're cheap. And then when you no longer have the option to do that, then I would look at the penny stocks and go, okay, what are the undervalued penny stocks that I can get right now? So, I can't believe an hour has sort of gone by so fast. As a reminder, we're going to start doing this, or I'm going to hope to do this, at least once a week. So every week doing a market update to talk about the latest info on your favorite stocks, as well as what's going on in the market. If you're watching this after the fact, please do me a favor, hit the like button. Make sure you subscribe if you haven't already. And also comment below on what stock you want to hear about. I used to get this comment all the time to cover stock X, Y, and Z. And honestly, it was really hard to do that because we weren't doing live streams back then. Now that I'm doing that, if you post in the comments about a stock you want to hear about, I can prep for it and come to this stream with some info. And that also gives you a reason to tune in after the fact. So I hope you guys enjoyed today's video. Hopefully we'll do more of this in the future. I hope you guys have a great weekend, and let's hope the stock market does well today. Like I said, from what it looks like, I think the stock market is going to see a lot more red, sort of offsetting the rally that we've seen recently with the overall indices and the stocks. But I hope I'm wrong. I hope, because obviously, like I'm going to assume that many of you have money in the stock market going long, and I want you guys to make money. So I hope I'm wrong here. I hope the CPI and PPI, doesn't matter what happens there. But if I was to, and I am putting money on this basically, if I have an expectation, is that the stock market will sort of trend toward new lows. Anyways, thank you guys for tuning in, and we'll see you next time.